So how does the forex market work, you ask? Well, it's important to understand that when we exchange or trade forex, what we're actually doing is trading one currency for another, and therefore forex currency prices, or exchange rates, are always priced and quoted in pairs. That is to say that we can only give one country's money a value when we compare it to that of another country's, and when we actually exchange or trade them, we are simultaneously buying one currency while selling another. For example, a typical forex currency quote would look as follows. This is a quote of the US dollar versus the Canadian dollar, where the rate is 1.2096. The first currency quoted in the pair is known as the base currency, which in this example is the US dollar. The second currency quoted is known as the counter or quote currency, and is represented in this example by the CAD or Canadian dollar. The order in which the base and counter currencies are displayed have developed over the years to reflect the traditionally strong currencies versus the traditionally weak currencies, with the strong currency typically being displayed first. The value of the base currency is always valued at 1, and therefore an exchange rate tells a buyer how much of the counter currency is required to obtain 1 unit of the base currency. For example, a price quote of US Canadian dollar 1.2096 means that 1 US dollar equals 1.2096 Canadian dollars. Now let's not get confused because the quote shows more decimal places than we normally observe when referring to money. To simplify, a quote of 1.2096 for the pair means that in order to purchase 1 US dollar, it will require approximately $1.21 Canadian. Now let's put this into perspective. Imagine we are planning a trip to see the beautiful beaches of Cancun, Mexico. Simply going on vacation, we would need to change our own country's currency for the currency of the country that we will be visiting, so that we could pay for things like food, entertainment, and souvenirs. That being said, let's say we go to the bank and exchange 1,000 US dollars at a rate of 10 to 1, which means that with every US dollar we exchange, we will receive 10 pesos, thus making our $1,000 worth 10,000 pesos. Now let's assume that our trip was unexpectedly canceled, so a few days later we went back to the bank to re-exchange our money. However, the rate was no longer 10 to 1, it was now 8 to 1. Now keep in mind we currently have pesos in our possession, so a rate of 8 to 1 means that it costs us 8 pesos in order to receive 1 US dollar. So if we take our 10,000 pesos and divide by 8, we'd receive 1,250 US dollars. But remember, we actually started out with only 1,000 US dollars, and now we have 1,250 US dollars. So we actually made a profit of $250 just by exchanging our money at different times with different rates. This is what we are doing when we're trading the forex market, taking advantage of the difference in price fluctuations between currency pairs. Extending this idea, imagine instead of starting out with only $1,000, we were able to start out with $100,000. Instead of only making $250 on the transaction, we would have made 100 times more, or a total of $25,000. Now for demonstration purposes, I've exaggerated this example so that you can understand the concept as it relates to real-world experience. However, the truth of the matter is that it is highly unlikely that a currency pair would move from 10 to 1 to 8 to 1 in a bank in only a few days, and the average person simply doesn't have $100,000 of liquid capital. However, the forex market allows you to replicate this example without these two scenarios. Firstly, capital of that size is not required in order to make great money when trading forex due to what's known as leverage. Leverage is using borrowed capital in order to increase the potential return of investment. This is probably one of the most attractive parts of trading the forex market. Leverage allows a trader to actually control more money in the forex market than they truly have. For example, most forex brokerage companies will allow you to leverage your account from anywhere from 100 to 1 to 400 to 1 times your initial investment. This means that with an initial investment of only $1,000, one could control up to $100,000 at a leverage of 100 to 1. This provides traders with the ability to make greater sums of money than they could in any other market using minimal investment capital. Secondly, in the forex market, currency prices move with a fair degree of volatility up, then back down, then often back up again. With proper trading techniques, it becomes possible to time the market to ride these price fluctuations up and down, locking in profits at various points in the day. This is not seen when exchanging money at the bank because these changes in prices are not instantly reflected in the rates that the banks provide. What I want you to understand is that when trading forex for profit or as a job, the objective is not simply to exchange currency for consumption. However, to trade with the expectation that the market rate or price will change so that the currency you bought has increased its value relative to the one you sold. If you have bought a currency and the price appreciates in value, the trader must sell the currency back in order to lock in the profit, as we did in our Cancun example. You've heard of the old adage of buy low, sell high. Well, that is exactly what we're looking to do. This is the goal of any investor or business person. Whether they are buying hot dogs for $1 to sell at their vendor carts for $3, or they are buying stocks like Microsoft at $10 with the hopes that it will one day rise and be sold at $50. The concept is the same and very simple to understand. The difference with forex and what makes it such an opportunity for the small investor is that anyone can partake in this market from the comfort of their home or just about anywhere in the world with minimal investment. There are no vendor permits or expensive licenses to obtain, as in the case of the hot dog vendor, and there is not a high amount of investment and or capital and time required to make money like in the stock market. This market is the one and only market that can provide anyone the ability to change their lives without the need of big financial investment requirements.